Good afternoon from the For the CB. This is Chris Robinson with your Traders Exclusive comment for today. Well, it's March 5th. One more day left to go in the week, and what a week and a half it has been. You can't look at the grains without looking at the backdrop of the outside markets. The outside markets, I'm talking about the US dollar and obviously the volatility that we've had in the stock market. Very quickly, I've got 10 seconds to talk about the stock market. I actually spent about 9 years in the Dow pit while I was also trading grains. So I have some background trading that contract and the S&P. Historically, 5% moves or less were always considered noise. It's the percentage points that matter, it's not the flat points. So let's take a quick look at where we are and where we have been. In 7 days, 8 days, 9 days, whatever it was, the Dow Jones and the S&P broke 16% off the record highs. We went from record highs to a 16% correction, 1.6. Pretty big correction, but again, not unprecedented. Back in 87, we had a one-day 22 or 25% correction. So this took 6 days. Since we've had that correction, we've been whipping around 1,000 points at a crack. Now that sounds terrifying to somebody, but that's not informed. But at the end of the day, we're having 2 to 4% moves. What's going on? The market is repricing risk. Every night we go to bed, we get another news story. Sometimes it's good, sometimes it's bad. The Fed rate cut was, that moved one thing. But again, as this plays out, as the market tries to figure out how much it's going to slow down the world economy, I would continue to anticipate 1 to 3% moves every day. So get used to seeing 50, 60 point moves in the S&P and 8 to 900 point moves in the Dow. If you can wrap your head around that, I think you'll feel a lot better. It's the percentages that matter. And as I speak to you right now, we've kind of come halfway back. With the S&P right around 3,022, that's 11% off the top. Historically, a 10% move or 11% move, that's considered a correction. So while it may be frightening to see these volatile swings, again, I'm saying it one more time, it's the percentages, it's not the flat price movement. Keep that in mind. Now I'm going to pull the car over and talk real quickly about grains. Grains have been ebbing and flowing with the concerns about China demand. That's really what we've seen happen. If you look at soybeans, we've been correcting after challenging the beginning of the year. Just a couple months ago, we looked like we might continue to go higher. We were looking at new crop soybeans possibly challenging $10. We got to about $9.84, $9.85. We since corrected down to $9. That was pretty much all supply and demand, and also concern about demand coming out of China. If you look at the South American crop, that crop keeps getting bigger. That's number one. Number two, because of the currency situation, soybeans coming out of South America and Brazil are cheaper than the US beans. So if you're China and you know you have to buy beans for 1 billion people or 1.4 billion people, you're not going to go buy the most expensive beans. So that is the worry for producers as we move forward. New crop soybeans, you really got to watch $9 as a big level. Bull or bear, that's going to have to hold as floor, or it could open up the door to see where the next support level is. So watch $9 in November soybeans. It's a very big level. If you switch over to corn, new crop corn, a lot of producers really were waiting to that 420, 430 level. The highest we've been all year is about 405. So you had a small window to hedge $4 corn. Corn dropped down to 375. In my opinion, if that 375 does not hold, it opens up again the door for lower prices, because that's what the market will do. It will test the price. If it doesn't hold, then it'll try and go down and test for a new price. So if you're a farmer or producer, you need to have a hedge on paper. You need to have your risk on paper. The whole rest of the summer, who knows where we'll be. If we get a drought or supply issue, or if all of a sudden things get healthy in China and they decide they want to buy all of our commodities, great, we'll have higher prices. In the meantime, though, you've got to play good defense. You've got to get your risk on paper, especially as we head into April. April, the planters start rolling. Farmers are going to decide, are they going to plant corn or beans? How much of each are they going to plant? So that's a lot to cover. Again, the commodities in general, corn, wheat, beans, the protein complex, we're all ebbing and flowing with what's going on in the outside markets. I think until the stock indexes calm down and you see some calmness also in the 10-year, 10 years yielding right around 1%, that's a big level. It's going to all put pressure potentially on commodities. So that's about it. Covered a lot today. If you're looking for help with anything, look me up online, Chris Robinson. Have a great day.